Welcome to the special episode where I'm going to talk about long-time outlook of Indian stock market. And in fact, few weeks before I came out with a video, Nifty 35k by the end of December 2023. Just to repeat, for those who have not seen that video, 2008 Lehman Brothers collapse, Nifty came down from 6,000 to 3,000. Then, after that, during the next 1 year, Nifty shot up more than 100%. Again, in 2020, during Corona crisis, Nifty fell from 12,000 to 7,500. But during the next 1 year, Nifty shot up more than 100%. So I feel the same thing may happen again. But as we can see the US inflation data this year and Russian-Ukraine war, and because of this market fell, and who knows, markets may shot up more than 100% again. And that time when the market fell, during Russian-Ukraine war, at that time the market was 17,500 and it fell up to 15,200. And now, if you calculate 100% shot up, it will definitely go to 35,000. So this is what I discussed in my past video, that how Nifty will touch 35,000. During Lehman Brothers collapse, Nifty fell 60%, and during coronavirus period, Nifty fell 40%, but this time Nifty fell only 30% or less. And the average stock fell about 20%. In both the situations, in 2008 Lehman Brothers collapse and 2020 coronavirus period, in both these cases, US started easing, that is quantitative easing. But right now in 2022, they are not doing quantitative easing, but they are doing quantitative tightening. Just opposite. And due to all these reasons, market may not go up to 35k. So today I came up with a fresh video, what will be the exact target for 2023. I want you all to know, markets never go up in one straight line. It goes up down, but in the longer period of time, it takes direction, either upwards or downwards. Why I'm bullish? Reasons are very, very simple. Many people say US recession is coming, inflation is very high, Russia-Ukraine war, Europe is in problem. When all these problems are there, how can we go up? To them, I want to tell you, bull market always climb the wall of worries. As long as there is a problem, then only the market will go up. In a stock market, when all is well, it is time to sell. When there is no problem anywhere in the world, the prices will always be high. So it's actually time to sell, not to buy. The time to buy in a stock market is when there is a trouble. And that is what we learned in 2008 Lehman Brothers collapse and 2020 coronavirus period. Also, whoever bought during those crises, they have been rewarded well. Stock market is always 6 months to 12 months ahead of actual events. And people say US inflation is high. Yes, it's true. But 6 months to 1 year down the lane, the inflation may not be high. People say US recession is coming. Yes, it may come. But the market has always affected in everything. So when actual recession comes, the markets goes up. And coming specifically to our market, and one thing I'm finding, the capital goods sector is doing very well. And let me tell you, if capital goods is doing very well, 6 months to 1 year down the lane, economy is going to do very well. I'm just giving you some simple analogy. What is capital goods? It is goods produced by companies and in turn used by other companies. Just to give you a simple example, having a coffee making machine, and I'm selling coffee, I have one machine, let's assume it can serve 100 people, and say 120 people, 130 people, 150 people coming to my shop. So the demand goes up. So what I do, economy is doing well. So what will happen? I will place more orders to make more coffee machine. Earlier I had only one coffee machine and I placed an order to make more coffee machines. Here you see, the person who is making the coffee machine is a capital goods company. Who is buying the coffee making machine is not the retail people. People buy the coffee, not the coffee machine. coffee machine is bought by the company that is selling the coffees. And because there is more demand, that is why I am giving orders for making more coffee machines. Because capital good company is getting more orders, their earning capability increases and therefore their share price will go up. And you can go and check the two famous capital good companies in India is L&T and BHEL. Look at the share price of BHEL and L&T. In the last few months, they have been doing very well. So what happens? I give order for making coffee machines. The capital good companies will take 3 months or maybe they will take more than 5 to 6 months to make coffee machines. And coffee machine is a very simple thing. If you look BHEL, they are making very big boilers and they all take many months. And if I am placing coffee making machine, I am getting the orders within 5 to 6 months and I can sell more coffees and then economy improves a lot. So capital goods companies will give you the pulse of the economy. If the capital goods sector is doing very well, that is 6 months to 1 year down the lane, the other companies are also likely to do well. In fact, the whole economy is likely to do well. If you will do a research, between 2004 to 2008, the biggest bull run came in India. Even before that, when the bull run started, it was capital goods sector which performed. And as capital goods sector is doing very well, and this is why I am taking the bullish view next 6 months to 1 year. Assuming that there is no bad news coming and things are going as it is, the stock market, not only in India, but all over the world, is likely to do well during the next 1 year to 1.5 years. And what is the realistic expectation? I have checked last many years when Indian markets have done very badly in the particular year, and the following year it gives a very good return. By the way, we still have 1.5 months more for the month of December to get over, and we have not done very badly because in the beginning of this year, in the month of January, Nifty was about 17,600 and as of today, it is still on 18,300. So still we have not done very badly. So intra-year volatility was very high, but on close-to-close basis, we have still done better. So next year, we cannot expect a blockbuster rally that was in 2009 and 2021. But however we know, India is in a sweet spot. Last 3 months, Indian rupee depreciated by 11-12%. So it's likely to stabilize during next 6 months to 1 year. And India is being included in the global bond index. So if that happens, India will attract a lot of foreign funds. So of course that will help to stabilize Indian rupees. So when Indian rupees is strong and stock market is doing well, so FIAs will have a double impact, more than what Indian retail investors gain due to appreciation of rupees. Looking at the overall things, so I'm still bullish and I have taken a bullish view for December 2023. So my simple advice, don't listen to the people around. It's time to be bullish and our market are bullish. And I repeat once again, the 35k was a kick bite and the realistic one 18,500 to 19,000 this year and 20,500 to 21,500 next year. And a little disclaimer, I'm not a SEBI registered guy. Consult your financial advisor before taking any call. Hope you enjoyed listening to the video and wishing you a bullish year 2023. Have a blast.